This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com, and I have with me this morning Ty Andros, who is no stranger to most of our listeners this morning. Ty is the president of TraderView, publisher of the TEDbits website, and writer and editor of his well-recognized Austrian newsletter, also named TEDbits. Good morning, Ty, and welcome back to our second session this week on economic growth.
Good morning, Gord, and thank you for having me. It's always a pleasure.
Ty, enjoyed our first session, and I'm looking forward to this one too. But before we begin, I need to quickly take care of some mechanics. We have slides to guide our conversation this morning, and I would ask our listeners to open the slides to full screen viewing. You need to open the slides to properly see the detail we'll be discussing, whether you're on SlideShare or using YouTube or whatever the different medias we're now using. All of them have an icon in the bottom right corner that by clicking it will open your screen to full screen viewing. All of them also have the ability to make comments or ask questions. Ty and I truly look forward to your questions. We learn a lot from your questions, and hopefully we can impart some of our experiences back in answering those in future shows. Ty, I want to get right to it here this morning because we're always short of time. I have a slide that bridges from our first session up here right now, and I want to take us today to the theme of inflation, because as we saw in the first session, whether it's hedonics, whether it's substitution, whether it's imputation, even how the formula of GDP itself is constructed, from a total revenue wealth creation, it completely misstated. But if you were to accept and assume that it is a valid way of recording it, the next issue is how we move from nominal to real, and that is how we adjust that for inflation. And the startling issue that I don't think the vast majority of people are aware is, I think we'd all agree we don't believe in the CPI number, but it's not adjusted by CPI. It's adjusted by something called the deflator. And I challenge anybody to figure out how the deflator is in fact calculated, or how to predict it. And even after it's been reported how it was constructed. It is what I refer to as the magic political plug that you can put in, and you can take any nominal amount and make it into any real number. I'm just showing here the amount of distortions, assuming you believe the CPI, between what the deflator is globally that's currently reported a couple weeks ago from IMF at 2.2%, whereas the official CPI numbers are 4%, close to 50% difference. And in the U.S., the deflator this month, 2 weeks ago, was reported at 1.54% versus 2.7%, almost half. And that's from the Bureau of Economic Analysis. And that compares to a John Williams number on CPI that he believes is north of 10%. So how could you possibly be this low in adjusting it? This is the question that I think everybody needs to ask themselves in looking at these numbers. We can't defend the deflator. We can't even understand it in truly trying to show it to you today. So we have to accept it. But what we can do is we can't talk about CPI this morning.
Well, this is an invention of the Ministry of Truth, okay, and it's out there just to, I'm going to call it fool the useful idiots in driving us to socialism. And as you can see here, the gap between that deflator and that John Williams number, they call that growth when actually it's nothing of the sort. And it's just one of the things that they use to fool the public and prevent what has to happen, and that's accountability in Washington, and accountability comes at the ballot box. And since people know in their guts these numbers, these differences, when they go to the grocery store, they realize that last year $100 bought a certain amount of groceries, and this year it just bought $90 of what they used to get for $90. And that's why we have change every election. It's throw the bums out. Unfortunately, each bum is replaced with another bum that's part of the same gang. I've always said, Gord, when we've met, that I call the Republicans and the Democrats the Gaudis and the Gambinos. And they fight turf wars known as elections to see who gets to get the front row in screwing the public. But in the bottom line is they're both organized crime families.
All right, what happens when we start to distort our numbers and play these games, it then forces countries around the world to do the same thing, because then they suddenly are on the wrong side of the investment curve. So when we distort their numbers, they quickly says, well, if you're lying, we better adjust ours to the same degree that you're doing that. So that's why you're seeing this spread of misinformation. It may not be the appropriate way, but aggressive accounting, shall we say, to represent their numbers compared to the United States. And of course, we're playing our own game. And for example, this is the looking at global CPI, or inflation, as currently measured through the IMF, and you can see that 4.1% I showed in the previous slide. And in the advanced countries, much lower. What you see here, and by the way, that's a log scale on these 1 to 10%. What you see is, according to this, inflation is going nowhere. If anything, it's going down slightly. Does that pass your common sense test on a day-to-day basis as a businessman running your business?
Well, as a businessman, it doesn't pass the smell test, but it really doesn't pass the smell test when I go to the store, whether it be Costco or Safeway, or pay for my health insurance, which is going up at a 10% compounded annual rate, or the price of beef, which is up 30%, or gasoline, which is up in 3 years over 125%, or any other, I'll call it real day-to-day living expense. Anybody that has to pay for their own goods and services, they're reeling, and the pain is huge because their living standards are in free fall. And I mean, literally, and when your living standard goes down at 10% a year because of misstated inflation, and then it does it the next year, the whole thing there is that people forget the power of compounding. And the power of compounding can go in reverse too. But using the rule of 72, if you have 8.5% inflation or loss of purchasing power, that means their true wages are cut in half every 6 or 7 years. I don't know about you, but there's going to be a lot of social unrest.
Charles Hugh Smith and I did a full show on the doomed middle class, and we got right into disposable income, how it's totally destroying the middle class. And in fact, inflation is 10% this year and 10% last year, and we're going to show that. That 20%, who can absorb 20% on their salary? So what's happening, inflation's actually accelerating. So that's why it's getting worse at a faster rate, no doubt about it. So globally, it's saying that they're all kind of caught in the same kind of scam. The inflation's not going up. This is the 2.7% that I had talked about for the U.S. CPI, and you can see it in the right-hand column at the very top for all items. If you just scan through the makeup of the CPI, look at all the numbers that are, 8%, 9%, etc. Where you see the low numbers are right at the bottom for shelter, for housing and transportation. And somehow, magically, we add all these up, and we come up with a distribution that creates 2.7%. And again, I challenge anybody to figure out what allocations they use to come up to 2.7. Because when I look at fuel, I see 9%, I see 8%. And remember, these are even adjusted. These are after things like hedonics and substitution to get them down to these kinds of levels. And to put that into perspective, Ty, because I know you brought some great charts, and you're a big believer in the work, outstanding work, by the way, that John Williams does, and we've had him on this show, and we hope to have him back again. He adjusted on the games that have been going on in the government. In other words, if I was to go back to 1984 and adjust the measurement of inflation as how the government did it then, and now how they do it today, forgetting what the rationale was for the changes, what would the difference be? And you can see the dramatic distortion on this particular chart. And this chart, though it goes back to 1984, is actually adjusting it, right, Ty, based on 1990 kind of data.
Look at the trend, Gord. Trend is ever declining production. If you really look at this, we really have had no growth since 2000. But like you said, John is using his gentle measurement of the distortions. And if you use his measurement of the distortions that have been introduced since 1980, we're not contracting at a negative 2% rate. We're contracting at about a negative 7% annual rate, which we're going to be showing in just a moment. The economy of the U.S. is in free fall, and the only thing growing is the pile of paper to mask it, and then misstating the inflation that's bleeding through. And, the United States, its principal export and principal production is worthless piles of paper. I mean, Gord, we have to tell the audience that I think we both agree that everything that's unfolding today is a consequences of Bretton Woods II and the unsound money system that we operate in. The problem with we don't have any kind of a consistent unit of value or measure of value, so that all of the measurements become distorted, and you really don't know the magnitude of them because of all the different distortions they've placed in other places to mask their poor policies that they've implemented since the 70s.
This GDP chart that John has adjusted based on the 1990 inflation is scary, to say the least. I have now up the slide you were referring to, which actually just talks about the inflation adjustments.
Once again, as you can see the Ministry of Truths, the lies just expanding just on a very consistent basis. You can see this spread widening, and that is government covering up the consequences of their poor policies. That's all it is. It's the Ministry of Truth. I think before we started, you said, once you start lying, it just starts getting bigger and bigger, and we can see that here in this chart. It's very clear. And, the magnitude of the lies are just getting bigger like the magnitude of government.
No choice. Absolutely no choice. I'll defend the politicians to say they arrive and they say, oh my goodness, what have I got here? They just don't know what to say. And the truth doesn't become an option for them because the first thing would be said to them, well, you don't want to scare the public.
Well, there is an option, Gord. And the option is putting in the policies of growth. The option is putting in the ability to have sound money and accumulate wealth. The ability is to cut regulations so that entrepreneurs are able to bring new products to market that give people more for less. Most people don't know what capitalism is, but capitalism is disinflationary, not deflationary, disinflationary, because the winners or the losers are picked by the public. And they're picked by the public because those people provide more goods and services for less money. But that's been short-circuited by runaway, I'll call it types of bribery. It's called campaign contributions, where the government goes in and they regulate people to have to buy goods and services and stocks and financial products to the people that have paid them the most. And what it does, and it puts the little guy that would have come along and created better value and brought real wealth to the economy, and it doesn't even allow him to enter the playing field. I mean, just look at Europe right now. If they just got rid of the employment laws and they said, okay, we don't have any mandated wages, we don't have any mandated job security. Well, guess what? 50% employment in Spain would change a lot, because those people would come in and take those jobs and perform them for a lesser price and put those, unionists and those crony capitalists quickly out of business. But until they implement policies that allow people to compete and produce more than they consume, then, we're just doomed. And, of course, that's the last thing these people are going to do because they're bought and paid for.
As an old manager, Ty, I know one thing. If you can't measure it properly, you can't manage it. Numbers are leading to malinvestment. They're leading to massive mispricing. They're leading to bad decisions because of these false expectations on growth the company's looking at. We've talked about that, and then how it's adjusted for inflation, which is this chart in front of us is scary, showing it north of 10%. But you made a really good point about the small businessman. America's built on small business, always has been. That's where the job creation. In 1982, as I recall, 49% of all companies were less than 5 years old. And the other day I was reading that figure now is 35%. Startup rates have fell to less than 8%, and they used to be north of 13%. percent. New firms as a percentage of all firms has decreased in 2010. It's down from 49% from higher levels. Only 12% of U.S. employment in 2010 was at new companies, compared with 20% in 1980, which this chart's going back to. So we've stranglehold small businesses' ability to create jobs, and small businesses become large.
I'll call it innovation prohibited by law.
Right, that's what's happening. Why does that happen, and where does it happen? Well, I would like to submit for many reasons, but one is right in these charts that we're looking at right now. And when I hear and talk and read what small businesses why they won't invest, is they don't believe the growth is there. They don't feel comfortable in the policies are going to stay the same, or they're going to be taken advantage of. They're afraid to make investment decisions right now, and I mean the word afraid to. And in many cases, they're just holding on for dear life because this growth, they can't see it. And hiring more people is something that's just not in the card, and it feeds on itself. Our next chart, I know that you'd done some simple numbers based on those inflation numbers.
Well, in our last episode at the beginning of this series, we figured out that through imputations, which are nothing more than ghost dollars, it represents no kind of economic activity whatsoever, no transfer of funds, that we had a $13 trillion economy when the public's being told $15.5 trillion. Now what we've got to do is subtract the misstatement of inflation to get to where it truly is, and then to make one more computation. But the 13.2 trillion, if you take out the misstatement of inflation, as you can see, now we're at $11.9 trillion economy at the same time as we're being told it's 15.5. Well, guess what? That means that our true rate of growth is 20%. True rate of economic activity is 20% approximately less than the public understands. And of course, all sorts of other, I'll call it terrible degradations, our debt to GDP, everything else. But then we've got to subtract one other thing. And what is that? That is government borrowing and spending called production. It's nothing of the sort. It's consumption. And it's the destruction and misallocation of capital. And so if you take out the government deficits, which were 300 or 400 billion when the chosen one was elected, is now ballooned by 400% to 300% to 1.3 trillion. We really come to a true economy that's actually producing 10.6 trillion.
Maximum.
Maximum. It's impossible. If you took out all the rest of the lies, which lots of people are working hard to discover, but we'll never get to the bottom of it because it's so opaque. But now we've got an economy at 10.6 trillion. We've got, that's in true economic activity, is 2/3 the size of what's being told to the American public. Well, guess what? Between those two things, this economy is shrinking at, a 10% compounded annual rate in real terms, which is the definition of a depression. And of course, there would be rioting in the streets. When you walk around or drive around, you sit there and you say, well, everything looks okay, and it really is a facade. Because, Gord, that we've had a bull market in government dependence. And whether it be food stamps up 40% or whatever, that's a constituency.
We have 90 million people, Ty, living off government transfer payments. Right?
Well, back in the Depression, those would have been what are called soup lines. But now the soup line's at your mailbox, so you can't see it. It's not right in front of you. It's not slapping you in the face.
You don't get stamps anymore. You get a credit card.
Well, the whole thing there is if people saw those food stamps, there would be a clamor for government policies that would fix it. Instead, it's just papered over with printed money, and people think they can have something for nothing. Nothing floors me more than when I was in my first Econ 101, and the first lesson that you're taught is a lesson called Tanstaffel, and that's there ain't no such thing as a free lunch. And we have now a third of the population that is sitting there and their dependence on government in one way or another. And so they're only going to vote rationally their pocketbook. So they're going to be voting for more and more government because they're afraid that they can't provide for themselves. And of course, they could provide for themselves if the government would take the shackles off the private sector, take the shackles off the entrepreneurs, quit trying to regulate them out of business to make sure, government is just the opposite of capitalism. Okay, and crony capitalism. And of course, Gordon and I are going to be doing 2 more series. We're going to be doing one on crony capitalism, and then we're going to be doing another series on mispricings and malinvestments. And those are coming series we want to all invite you to. But the bottom line of it is this: is the government is now at the point where it's a cannibal, and it's virtually consuming and eating the private sector. It's runaway socialism and crony capitalism and fascism, and the magnitude of it is going to be seen in this next chart.
I have your jaws of death, Ty, which I think really reflects what you just said.
Well, this is the black swan of all black swans. Gord, we both agree that we're in a currency and financial system extinction event, as outlined by von Mises. This is showing the consequences of credit growth. When inflation is misstated, like we showed before, let's say that inflation's 10%. Well, government spending has got to go up that much, or they can't even buy as much as they bought last year. And that's why we see government exploding, because the expenditures exploding because the price they have to pay for that is compounding at an 89% year. And of course, we've demonstrated here the economy is not growing. In fact, it's contracting. So if their expenses are going up 7% compounded a year, and their real income is going down 7% compounded a year, well, you've really got a 14% problem using the rule of 72. They, over 4 or 5 years, they've cut everything in half. It's just like runaway impoverishment. And it's not going to end anytime soon, because these people are sociopaths and psychopaths. And the people that created the problem have no ability to solve it. And Keynesianism, especially with fiat money, is nothing more of an obscenity and assault on people. I call it cannibalism of the worst sort.
If I was to have 100 senators here, I doubt 10 would understand truly what makes up GDP, where the distortions are, would even be able to explain things such as hedonics or substitution or imputation. I don't believe any of them truly would even be able to quote what the deflator is. They just take this at gospel. Therefore, all these distortions you're talking about, they're trapped. They're trapped into, and I'm giving them the benefit of the doubt. That they're naive to it. Heaven help us if they're not naive.
There's going to be a market clearing event.
That's the bottom line, absolutely, of what this leads to. You can lie, but at some point reality comes, and when it comes quickly, abruptly, and painfully. And there will be, if we want to use the word, a market clearing event. It's on the horizon. It must happen, because you can't keep building a house on sand. And you've got to the point, as we've just showed with some of these changes in the GDP distortion, the change in inflation distortion from John Williams's numbers. These are getting larger and larger, harder and harder to hide. And as we get to real interest rates that are at the level that we're at right now, it's harder and harder for the government to even try and create any kind of marginal growth. And we have shrinking capacity right now. Ty, we need to wrap. We've got a number of shows that we're going to be back to on an ongoing basis to really build on this, but we're going to be back together in a couple days to pick up and say, what are the real consequences of this? Okay, if these numbers are invalid, what's it mean on a day-to-day basis? Because I think you're going to be quite taken back of what the consequences are, even on short-term decision-making. Ty, any last kind of comments you want to make, and also on how people could learn more about your products, your services, and the things that you do?
Well, my closing comments, and I'm a libertarian. I believe in the Constitution. I would be called a terrorist, just like the founding fathers. The founding fathers knew that this was going to happen. I don't know who said it, but they said, we give you a republic if you can keep it. And of course you couldn't, because we've now had the money is so enormous that the only people that'll enter the playing field are scoundrels and crooks. And these are what we call leaders. And they're nothing of the sort. They're parasites. And the idea that the economy is improving or anything like that is nothing more than the Ministry of Truth and Propaganda and their mainstream media people giving you stuff that you take as gospel because you trust government. And not only are we coming up on a market clearing event, which is going to be, I'm going to call it the opportunity of a lifetime. You're going to, in my estimation, get to buy stocks at the best buying opportunity since the bottom of the Great Depression. But preserving your wealth as this thing unravels is going to be a huge challenge. But if you're able to set your sails correctly, it actually can be the greatest opportunity in history. And a couple things that you have to do is you have to learn how to restore the functions of money so that they can't steal your money with a printing press, and you have to learn how to make money when markets go down as well as when markets go up. Because as you well know, Gord, most of the appreciation in the stock market is nothing more than an illusion, and that measured in real terms, the stock market is in free fall. I mean, I think that I've seen a chart from you before that showed that we're actually, in real terms, below the 2009 lows. And if you can't play that, you're going to be a victim of it. But if you can play it, you're going to get, I believe, wealthier than your wildest dreams. But the whole thing here is slicing through the illusions, learning how to set your sails properly, protect yourself from the predators, and learn how to play this transfer of wealth from those that hold it in paper to those that don't to your advantage. And Ted Bitts is dedicated to that. I'm dedicated to helping people diversify their portfolio into absolute return alternative investments using professionally managed futures, and I use other techniques to restore the functions of money back to when we had a reserve-backed currency, and I use long-term gold and silver options. But we love you all. That's why we're doing this, is because we like to believe that we're pamphleteers like the American Revolution. And of course, you don't want to say that word because you'll instantly be labeled a terrorist because you oppose Leviathan government. But I got to say, people need to really tune into Gord's GordonTLong.com. It just is fabulous, and we're just dedicated to trying to educate people and get them to not be victims but victors.
It all starts with education and the truth, and that's our role, is to get the message out. You as a listener can make your own decision. I encourage you, everything we say, go and test it. Go and read, do your own reading, do your own investigation. And you may come back and decide that Ty and I are understating the magnitude of the problem, because we have to bring everybody along here so that they can see what we see every single day. But it starts with the truth, or we would, as investors, Ty, we'd lose our shirt, wouldn't we? We have to know what the truth is on growth. We have to know what's going on. Otherwise, we'd make false investment decisions. And that's why, as you mentioned in the stock market, I don't look at the stock market valued in U.S. dollars. I have a whole different way of looking at it, and we get into that in the analytics session to properly assess what's happening in the market. Market's falling, has been dramatically. Forget nominal and measured in U.S. dollars as they print them. That's just the wrong way of considering it. But there's those who do, and they're going to pay the price. Ty, we have to close. We're going to be back together in 2 days and talk about some direct consequences of that. So until then, take care.
Thank you for having me.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.